Hey, how's it going? Jed Barker here with Best Life Mortgage. I make these videos to help the lending process for you become easier and more understandable. And today, what I'm going to do is I'm going to break down currently active listed property here in the upstate of South Carolina. We're going to look at that property quickly, and then we're going to go look at it as an investment property to see if it would be a good investment property to buy to rent out on a short term rental basis. We'll look at the numbers, look at a calculator together, and hopefully, this will be educational for you, and you'll learn something from this that will help you in your next purchase, whether that be a primary home purchase or if that may be your first investment property. So first off, let's take a look at this home. It's on, I'm going to go ahead and move my image over here, but this home is currently listed at 17 Henderson Street in Greenville. It's listed at 229.9. Looks to me like it could be a great little investment property, or a first, or maybe a starter home, but a great little investment property. It's very well taken care of. It's been renovated, wonderful new kitchen, everything like that. This is listed currently by Brandon Marin. Brandon is one of my real estate partners. I do quite a bit of business with. He understands real estate agent from an investment perspective very well. He's an active investor. We have closed quite a few I've closed quite a few home loans with him for investment borrowers or investment clients. And take a look at Brandon's Google reviews, 5 stars, 33 reviews. He's with Homeling Realty. I highly recommend Brandon if you're going to be buying an investment property here in the upstate of South Carolina. So let's take a look at this home. Let's go back to it real quick. This is a $229,999 home for purchase. How do you determine if this is going to be a good purchase for you as an investment property? What if you want to rent it out on a long-term basis, which is a 12-month term? Or what about short-term rentals? Is it even allowed short-term rentals, or does it need to be mid-term? You need to really look at the property and look at the guidelines for the area to see which is possible. I know some areas don't allow short-term rentals, so you'd have to do what they call mid-term rentals. You rent it month to month, or long-term. But let's take a look at this investment calculator. Let's check out the whole deal. So if we go to the investment calculator on this one, first thing we're going to input to see if this would be a good deal, to purchase for as an investment property is how much rent would be. So I don't believe the property would rent for $2,500 a month on a short term or on a long term rental, like an annual contract. I believe it probably would be closer to $1,500 to $1,600, but on a month to month basis, I believe it could rent for $2,500 or more. So I'm going to put the rental amount at $2,500 a month. I'm going to put an annual increase of 4.38%. And then I'm going to say the home's going to be purchased, if you look at this, at $229,900. Okay. There's annual property taxes at $3,700. Here in South Carolina, we have what's called primary taxes at 4%, and then investment property or secondary home taxes at 6%. So I'm going to put this at the higher tax rate. Homeowners insurance, typically, if you don't know this, on rental homes is usually less expensive than on a primary purchase. So I'm actually going to put this at $67 a month. Then you got to think about things such as association fees. Does it have an HOA? I don't know on this home. Monthly maintenance. You should always factor in some kind of maintenance on the home. I put at $94 a month. Are you going to manage the property yourself? From a perspective of managing it, or are you going to hire a management company? I don't know for your particular situation, so I'm not going to put a management fee on this, but if you did, you want to throw one in there. Are you going to renovate the property, or is it ready to go? This one doesn't need renovating. It's ready to go, right? And then if you sell it, how much is it going to cost to sell? I'm going to put 6% because that's, typical fees to sell a home. Now, the next step to determine is this going to be a good property for you to rent out is the loan. So I'm going to put this as a conventional loan with 20% down, 30-year fixed. I'm going to do the rate at 7.25. I'm going to say closing costs are about $6,900. I'm actually going to put those up to $7,500 because it's a little bit more as a rental property. There's no mortgage insurance on this type of loan because you're doing 20% down. Okay. And then I'm going to say how long before you sell the property. I'm going to put it as 10 years. So we're going to hold for 10 years and rent for 10 years. And I'm going to leave these numbers very reasonable. 3.51% historical appreciation in the area, South Carolina, Greenville area. Okay. Now let's go up and look at our numbers and see what's going on. So this is the very first part is what is our monthly cash flow? What's our cash flow monthly, right? Very important to know. So if we have a rental income of $2,500 a month and expenses are $1,724, our year one monthly cash flow is $776. Okay. So that's $776 as a year one monthly cash flow. What's our cumulative cash flow over 10 years? It's $159,657 for cash flow this property. So as you can see, not a ton of cash flow, but still not bad that it is cash flowing. So let's go down to the cash on cash return. This is a big deal because you have a lot of places where you can put your money. You can invest in the stock market. You can invest privately. You can invest in Bitcoin or other cryptos. Tons of things you can really invest your money in. But where you're going to get the highest cash on cash return, if you look at this estimated annual cash flow sheet, you'll see that the estimated cash on cash return of this property is 298%. So you want to compare that to where else you will be putting your money. And remember, with real estate, it's relatively the only safe place you can earn leverage at the level that you could, because of the asset, because of the real estate itself is a leverage product when you do mortgages on them, right? And you don't get a lot of leverage in stocks unless you're going to gamble quite heavily on the stock market through leverage, and that's pretty risky, especially for those who don't know how to do it. So I don't highly don't suggest you leverage yourself very much in the stock market. But so your cash on cash return, very good on this property. Your appreciation gain, $94,000 over your whole time. So you're going to earn that over your whole time, and then your amortization gain, $25,000. So if you go down to your final sheet here, rental income, appreciation, gross revenue. This is over 10 years. You've earned quite a bit on this property. Exactly. And your rental income average compound return, you can see it right there. It's quite high. So even at this it could be a great investment deal. I'm very good at making sure we understand the investment portion of this so you get into the loan part correctly for yourself. So if you have a particular deal you want to look over with me, I'd be happy to do that with you. I am a local mortgage broker here in the upstate of South Carolina, easily contactable right here on my page through messaging, on my Facebook account, on my YouTube channel, and call me at 864-800-9251. But I do look forward to serving you. I hope this video has been helpful. If it has, if you could give me a thumbs up. If you'd like to have more information like this, you could definitely subscribe to my channel. But give me a thumbs up, maybe make a comment, help the YouTube algorithm. I'm a new YouTube page here, and I appreciate you. I look forward to serving you.